good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, it's another rainy Monday, and today we're taking a look at the energy sector and energy-related stocks on the Trinidad and Tobago Stock Exchange. Today we're talking about the first quarter results of Trinidad and Tobago NGL or TTNGL, as well as National Enterprises Limited for its 12-month period concluded March 31, 2022. Now, both companies or both stocks would have reported much improved performance. Let's take a look at what some of the main drivers were and what investors can expect in the months ahead. Turning firstly to TTNGL, well, the company delivered an earnings per share figure of 42 cents, which was a 31% increase from the 32 cents in the first quarter of 2021. So certainly a fairly significant improvement there. And that was really attributable to that improvement in share of profits from its joint venture, its sole investee company being Phoenix Park Gas Processors Limited or PPGPL. And those share of profits increased a whopping 29% from 50.4 odd million to just about 65 million TT dollars. Interest income marginally up it doesn't show quite well here, but up 22%. Overall profit after taxes up just about 29% from 50 odd million to that $64.6 million. So certainly a very much improved performance for TTNGL, and much of this improvement was really attributable not so much to production, but to improved pricing of the commodities that it does produce and sell. And we can see those commodities being butane, propane, and natural gasoline would have had very material increases in prices over the comparable quarters of first quarter 2021 and 2022. Butane prices in that blue column increasing from 95 cents per gallon US to $1.56, a 64% improvement. Propane also improving from 90 cents to $1.50, a 45% improvement, and natural gasoline prices improving from $1.54 US per gallon to $2.20 US per gallon, also a 64 to 65% increase. So much of that would have been quite beneficial to PPGPL in terms of, and TTNGL by extension, in terms of its ultimate selling prices of these commodities to its export markets. When we take a look at TTNGL's book value per share from an investment perspective, we can see that it's becoming much, much more attractive with those revaluations of its assets. We can see that book value per share would have increased to about $51.86, and its price to book ratio would have declined from 1.1 times to just about 0.6 times, and a lower price to book ratio typically is a good indicator for investors of value. And we can see that there continues to be improving value, or it would appear to have improving value for TTNGL. And also included in that increasing value is the prospect of higher dividends going forward with continued increases in earnings. And we saw that in the final year dividend increasing from 25 cents to 50 cents in fiscal 2021. And of course, investors will be keenly looking on at the interim dividend, which will be announced later in the year. Now, at a price of $20.69, TTNGL is trading at a price to earnings ratio of 6.1 times, with a dividend yield currently on a trailing basis of 3.6%. Again, investors will be looking forward to some improvement in that dividend should increased earnings continue in the coming months. So on the basis of robust energy commodity prices, the continued international expansion and diversification with PPGPL's continued acquisition of international assets, particularly in the US, a nascent domestic production recovery with gas production expected to increase to about 3.2 billion standard cubic feet per day going into 2024, and a recovering dividend, or the prospect of a recovering dividend. Bourse is going to maintain an overweight or buy rating on TTNGL for the time being. Turning quickly to National Enterprises Limited or NEL, well, the group would have recorded an earnings per share figure of $3.46, which was a very stark improvement compared to its fiscal 2021 earnings or loss per share of 45 cents. Dividend income was down for the period, the comparable period, from 26 odd million to 13.6 million. However, there was a very massive gain on fair value revaluations. And again, that would have been attributable primarily to increased prices in energy commodities. That gain on revaluation up just about around $2 billion compared to a loss on revaluation in the prior comparable period of just under 300 million. Overall profit for the period up to just over $2 billion compared to a loss of 270 million in the prior comparable period. Now, what would have driven these revaluation gains? Well, we can see it's pretty much a pricing story. Natural gas prices from April 2020 to the January 2021 period, and this is based on available data, increased from $2.10 per MMBTU to just about $4 per MMBTU on average over the April 21 to Jan 2022 period. The natural gas liquids prices, again, increasing quite sharply from 65 cents per gallon in the April to Jan 2021 period to April 21 to Jan 2022 period, up to $1.39. Ammonia prices increased from $186 per ton to just around $668 per ton on average over the April 2021 to January 2022 data. And LNG, well, those prices would be pretty much correlated to natural gas prices, but there was a sharp decline in production. However, the pricing story is dominating, and that has led to significant revaluations and the prospect of increasing dividends for NEL in subsequent periods as well. Again, taking a look at NEL's book value per share and its price to book ratio, we can see that revaluation of assets would have led to a very significant increase in the book value of share to about $7.14 compared to its price on the market right now of about $3.25, which would have led to a sharp decrease in terms of its price to book ratio down to about 0.5 times. So again, perhaps a signal for investors of increased value in NEL shares. So at a price of $3.25, NEL is trading at a price earnings ratio of 0.9 times with a dividend yield of 0.9% currently, but forward-looking, those dividends could be set to increase. So with robust energy prices, attractive market-to-book valuations, and challenged domestic energy production, but set to recover, Bourse is going to maintain an overweight rating on NEL for the time being. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773, email us at invest@boursefinancial.com, and check out our website at bourseinvestment.com, where all of our research is absolutely free, and you can catch our full article today in today's edition of the Trinidad and Tobago Guardian. Well, see you next week. Stay safe. And until next time, this has been the Bourse Report.